want to start very quickly with banking crisis. Maria Teresa, you were just saying you were surprised you haven't seen Powell yelling out more forcefully already. Jay Powell, the Federal Reserve Chair.
If you look at which bank this is the Silicon Valley Bank. This is the startup bank. This is also oftentimes the Democratic ATM bank of all those investors. And so the fact that you don't have these the investors that invest in the people. So the fact that you don't have someone actually talking from the administration and being so forceful, I do think that we're going to see our Republicans saying, oh, you shouldn't bail this one out. And it's going to be, I think, very much along political lines.
This was a bank that only catered, for the most part, to Silicon Valley and their customers. So how did Silicon Valley get so big? All of the money that cascaded into our economy at the beginning of the pandemic helped to spur that big IPO and SPAC streak, if you guys remember. We had over 1,000 IPOs, 59% of offerings, 59% were SPACs. 90% of them were pure crap. The others all went out overvalued. Everyone who bought them at the IPO price, every American is losing money right now, even before this crisis. In the meantime, though, all of that money went to Silicon Valley Bank. Their deposits went up 300% to $200 billion. The average bank over that same time frame, their deposits went up 35%. So they're living large, they're having a great time. What do they do with the money? They don't lend it out. They don't lend it out. By the way, who the hell needs a loan in Silicon Valley? They don't lend it out. So they put it into different things and they start investing with it.
All right, guys. So I apologize for once again filming in a hotel room, right? But this time it's not because I'm traveling. It's because my internet went out. Okay, my internet went out. It won't be fixed till tomorrow. So I had to go to a hotel room to continue to do my job for you guys. Okay. So again, I apologize for the hotel room, but we got to talk about this bailout of woke SVB Bank, Silicon Valley Bank, okay, because they've been bailed out. If you guys didn't know, this bank, Silicon Valley Bank, which primarily serves tech startups and private equity firms, basically collapsed last week after poor and reckless management staff who, again, appears to be woke, right? So woke that their executives, at least one of their risk managers out in Europe, was more concerned about diversity, equity, and inclusion and LGBTQ and other woke programming / brainwashing propaganda. They were more concerned about that than actually financial risk, which this firm, at least in the U.S., took a whole lot of, and that is what led to their collapse. Now, the Biden administration is playing politics because bailouts are unpopular, right? They're unpopular in this country because we saw what happened in 2008, how all these banks essentially went under because they took more risk than they should have took, and the taxpayers bailed them out, right? Main Street is always bailing out Wall Street, and people are getting sick of it, okay? They're getting sick of rich Wall Street elite, okay, getting away with financial mismanagement of customers' funds, and then turn around and getting a handout from the government, which is basically just rewarding bad behavior. Now, the Biden administration, instead of calling it what it is, a bailout, he actually tries to avoid calling it a bailout, lies about, if the taxpayer is going to foot the bill. And then also, he's, of course, blaming Trump because everything is Trump's fault in Biden's administration. But before we get in, I got to tell you guys, while we're in this current potential financial crisis, okay, it seems like we're on the verge of maybe having a bank run. You might want to think about distancing yourself from the traditional financial system by getting some physical assets like gold. Noble Gold Investments is pleased to let you know that gold is the best investment class for 2022. According to longtermtrends.net, gold has actually outperformed the S&P 500, Dow, and Bitcoin for 2022. So what are you waiting for? Open a gold IRA or silver IRA with Noble Gold Investments this month and receive a free 1/4 ounce American Gold Eagle coin with every qualified IRA purchase or rollover of $50,000. You can't go wrong with Noble Gold Investments and their thousands of 5-star reviews. So call the team now at 877-646-5347. That is 877-646-5347, or visit Noble Gold today at noblegoldinvestments.com. But just remember, there's always a risk of investment, and there's no guarantee of any kind.
During the Obama-Biden administration, we put in place tough requirements on banks like Silicon Valley Bank and Signature Bank, including the Dodd-Frank law to make sure that the crisis we saw in 2008 would not happen again. Unfortunately, the last administration rolled back some of these requirements. I'm going to ask Congress and the banking regulators to strengthen the rules for banks to make it less likely this kind of bank failure would happen again. Thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. All customers who had deposits in these banks can rest assured, they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable. In my administration, no one is above the law.
Yeah, so you seen that, you heard that. Now, first, let's talk about the elephant in the room. Biden once again blaming Trump, okay? Like they always do when something happens under his administration. Now, let me explain to you why this is not really Trump's fault, okay? What Biden's referring to in terms of regulation rollback was when the Trump administration rolled back parts of the 2010 Dodd-Frank Act in which they changed what it means to be too big to fail, okay? So there are certain regulations and restrictions that are put on banks based off their size, okay? If a bank is deemed too big to fail, then there will be stricter, tougher restrictions from the government on the bank to make sure that it can meet liquidity needs of the customers or the depositors of the bank. And it also is subject to periodic stress tests that they must pass. Okay, there's much stricter regulation. Now, big banks can handle this pretty well. Banks that are too big to fail, think JP Morgan, Bank of America, etc. Right? They're fine with that. Okay, because they're big, they're large, they have a lot of money. Doesn't really matter. Right? Now, when it comes to smaller mid-sized banks, it's a little bit different because they have less assets to work with. So more regulation means less profit for them, and they can't necessarily compete as well with the bigger banks. So the Trump administration decided to give smaller banks and medium-sized banks a boost by saying, look, if you have less than $250 billion in assets, then you're no longer classified as too big to fail. However, the Fed is ultimately responsible for conducting periodic stress tests and creating tailored regulatory standards for medium-sized banks, which is what Silicon Valley Bank is, and Signature Bank, the second bank that collapsed before the Fed's bailout. Now, again, Democrats are coming out here and blaming Trump for this, even though, again, this is not Trump's fault. Biden had 2 years with the Democratic Congress to put that legislation back in place. But he didn't do it, right? Again, it's the same thing they did with the East Palestine crisis, which we're going to talk more about that. But again, Democrats cheered this on. I think at least several of them voted for the legislation. This was bipartisan. Republicans and Democrats agreed on this.
I'm just going to start with, I think this is a really good idea. In 2008, 2009, I worked in investment banking. I was in the gnarliest part of the business in structured credit derivatives. And banks took way too much risk, and we didn't have enough cash in reserves. But when Dodd-Frank was put into place, it brushed every bank in the same way, and we were subject to regulatory capture. So those massive JP Morgans of the world, they can afford to hold more capital. They can hire 1,000 more compliance officers. But if you ran a small or mid-sized bank that predominantly did loans in the Midwest, you couldn't possibly afford that. And they were the institutions that got strangled. And even if you don't care about banking, If you need a loan and you run a small business in all different parts of the country, you couldn't get it because the JP Morgans of the world, they're not interested in doing business with you. I think this is a great move. And the fact that Barney Frank thinks it is, I think says a lot.
Yeah, so as you can see there, Democrats loved it, right? They loved it when Trump signed this legislation. Now they want to talk about, oh, well, it's Trump's fault. Again, when Biden had 2 years to, reinstate that legislation. Now, here's the problem. I don't necessarily disagree with Trump's deregulation because I do think it's important for small and medium-sized businesses to be able to compete with large businesses. I'm actually pro that type of deregulation. The problem is not the deregulation. The problem is that businesses who are allowed to take more risk because of deregulation need to do proper risk management, right? And if they don't do proper risk management, then they should be allowed to fail regardless of the consequences. And if there was a bank that you would allow to fail to let other banks know that, hey, you can't play around with customers' money like this, or else you're gonna go under regardless of the consequences, this would have been the failure to allow to happen, right? This would have been it. You should have allowed this one to happen. The reality is that while the Biden administration claims that shareholders and unsecured debt holders are not going to get bailed out, who's actually getting bailed out are the clients, the customers, the depositors of Silicon Valley Bank, which were not everyday people like me and you, right? It's not us. It is private equity firms and venture capital firms, aka the Democrats and Republicans as well too. They're rich friends in Silicon Valley, okay, that run these startup firms, that run these tech firms, that donate to the politicians. Those are the people that's getting bailed out, right? The Federal Reserve is basically creating a loan program to allow banks to trade in their devalued securities because of interest rates increasing at par, okay, temporarily, right? That's what they're allowing them to do create more liquidity and allow people to get their deposits back. Now, Biden says that this is not going to be a burden on taxpayers. However, it could be in the form of inflation. With all that new cash being flooded into the market, again, we could see some inflationary effects. And just remember, inflation is really just a tax mainly on the poorest people among us, okay? Inflation is a tax, and we're paying that tax. Now, this tax of inflation, unfortunately, Silicon Valley Bank and other banks like Signature Bank as well too, they did not properly manage the risk of the investments that they were taking during a time of super low interest rates, okay? So Silicon Valley Bank had invested a lot of their assets into long-term debt securities from the U.S. Treasury, okay? Which typically is a pretty safe thing to do, right, for the most part. However, not in a super low interest rate environment in which we were spending trillions of dollars, putting $trillions into the economy. We heated up too much. We caused inflation to the point where the Feds had to rapidly increase interest rates. And as interest rates increase rapidly, those bond prices, especially long-term bonds, those prices fall, okay, substantially. And that is what happened with Silicon Valley banks. So when their customers, their depositors decided that, hey, we need to withdraw some money from the bank, right? Enough of them did it at one time where Silicon Valley Bank said, oh, we actually don't have the reserves necessary to give these deposits. So they had to try to sell their securities that are now super devalued because of rapidly rising interest rates. And it wasn't enough to cover the deposits that people were withdrawing because, again, venture capital firms, they thrived off low interest rates as well too, taking on debt. And a lot of these venture capital firms basically pay off their debt by getting more debt, right? But in a high interest rate environment, they can't do that. So they're now strapped for more cash because debt is not cheap anymore. And it's just like it's a rolling effect, right? It's a domino effect. And that's really what happened here. I mean, there was a special set of financial conditions that were created from trillions of dollars in spending that caused inflation to low interest rates, historically low interest rates that had to be increased at historic rates to fight inflation, and just this company's mismanagement of client funds that come from businesses that are more risky in general, right? So it was the perfect storm of just bad things to happen, which caused this collapse to happen, right? Here's the deal. I think that the bank should have been allowed to fail, right? Now, people say that, oh, well, it was going to cause a bank run and people would have went to all the banks and started withdrawing money. I think that's just fear-mongering. But regardless, the Biden administration and the Federal Reserve and the FDIC, okay, basically decided that, hey, we're going to create a very perverse incentive for banks in the future to take more risk by basically guaranteeing that, hey, if you go under, right, for this reason right here, for, you know, being too risky with your assets, with your clients' funds, then we're just going to bail you out, right? If you are, you know, $200 billion in size, which is where Silicon Valley Bank was, they was on the verge of medium size to too big to fail. They was on the verge. Yeah, we're going to bail you out. Okay. And again, what type of incentive do you think that creates in the long term? That basically tells all these banks that, hey, we don't really need to abide by federal regulations. We can just take more risk because guess what? The feds and the government, they're going to bail us out. And again, this has been done by the Biden administration for political reasons, right? Democrats are supposed to be against these type of bailouts. Of course they're for them, right? Because again, it's their friends, right? Their friends can't fail. This is not the American people, okay? The average Joe like me and you that would be in trouble. They try to say that it would be us, okay? But no, right? This bank we weren't their clients, okay? The rich were their clients, okay? And they were not going to allow the rich to lose their deposits, okay? They weren't going to allow them to do that. Again, so I'm not surprised. But what I want you guys to notice here is the difference between how fast the government acted on this, on their friends, their rich friends losing money, putting their money in a risky bank, okay, like Silicon Valley Bank, a woke bank. Look at how fast the politicians acted to save them versus how fast they acted to save people who are actively being poisoned in East Palestine, Ohio. Look at the response time. Biden spoke about this immediately, right? It took what, 3 days? Right? We had a weekend, so he had a little bit of leeway, right? To ensure that everything's going to be all right. But East Palestine, actual, regular, normal, middle-class, working people, happens to be Trump country as well, too. Crickets, right? Crickets. He had nothing to say. I think, it took 2 or 3 weeks for him to comment on it? This right here, guys, tells you everything you need to know about who is valued in this country, who's not. Who do these politicians work for, who they don't work for? They don't work for people like me and you. They work for the rich. It's really that simple. We don't live in a democracy. You know, the Democrats are right, right? There is an attack on our democracy. It is from woke corporate America, right? That is the attack on our democracy because the politicians clearly don't work for the regular people. When the regular people need help, it's screw you. You can drink poison water, right? But when the banks need help, when the rich need help, they're right there immediately. Okay, they get on both knees and they, you know, give as much pleasure as they can. Okay, that's what they do. Look at what happened in 2008, bailout, right? Which I mean, again, at the expense of taxpayer dollars, right? Bailout. Look at what happened during COVID. They gave most of the COVID relief money to them, right? It went to the corporations. It went to the rich. Normal, regular, everyday people got some unemployment benefits, which, again, were not smart, okay, expanded unemployment and stimulus checks. But that was a minority of the funds. Most of the funds, again, went to corporate America. They got the biggest stimulus. And guess who's paying for that? Not them. The taxpayers paying for it through inflation. This is how it works. Again, it's capitalism when it comes to profits, right? Capitalism. Socialism when it comes to the losses, right? Capitalize the profits, socialize the losses. That's what you do. And that's what you're saying. Again, the Biden administration, through this bailout, has created a very perverse incentive in the financial industry now for these banks to say, hey, you know what? We know what's going to happen if we end up going over because of not following the rules and regulations, for being irresponsible, for being more focused on wokeness than actually managing risk, right? We know what's going to happen. The Biden administration is going to bail us out because he don't want to lose an election, right? He don't want to lose an election. He don't want to have a major financial crisis happen under him, so he's going to do whatever he can to bail us out. Look at what happened to the market today, guys, right? Pay attention to what's going on. We just had a major collapse of a bank, okay, a major bank in the U.S., and the market was up, right? The market was up. Why was the market up? Well, because this collapse, to some investors, signals that the feds are going to stop raising interest rates, right? They're going to stop raising interest rates to combat inflation, which made the market go up, right? Because that's a sign that, hey, you know what? The party might be back on, right? The feds might stop raising interest rates. Who knows? They might start lowering interest rates, okay? That's what it signaled to the market, right? Which tells you how messed up everything is. Again, just bad incentives all around, and this is why you see stuff like this happen, folks. There are no consequences for politicians. There are no consequences for the rich. There's no consequences for corporations. But for the American people, though, there's always a consequence. In this sense, inflation is the consequence. So let me know what you guys think. Make sure you like, comment, and subscribe. Most importantly, share a Black conservative perspective. Peace.